Today is Thursday, October 31st, and you're tuned in to the Stock Market Daily News Podcast, your go-to source for smart, actionable updates on markets and money. Yesterday, Wall Street delivered another mixed close, with the S&P 500 eking out modest gains, the Dow Jones hovering near break-even, and the Nasdaq holding just above its recent highs. But the real fireworks came from a couple of mega-cap tech giants and big sector rotations. From Amazon's blowout earnings to Nvidia's historic milestone, we'll break down what's moving markets and what it all means for your portfolio. Let's get right into the top stories and the latest numbers that matter. First up, Amazon staged a massive comeback after unveiling third-quarter results that blew past investor expectations. Amazon's stock soared over 13% in after-hours trading, jumping to around $174 a share. What's behind the rally? The e-commerce titan delivered net sales of $180 billion, up 13% year-over-year, and earnings per share of $1.95, well ahead of consensus forecasts. The real jaw-dropper was Amazon Web Services, which grew revenue 20% to $33 billion, marking its fastest pace since 2022. Investors cheered CEO Andy Jassy's comments on surging demand for AI offerings and a renewed focus on efficiency, even after announcing 14,000 job cuts earlier in the week. The takeaway: Amazon's banner quarter could mark a turning point in sentiment, giving it fresh momentum among the so-called Magnificent Seven into year-end. If you've been eyeing Amazon as a laggard, this might be the reset the bulls were waiting for. Turning to the broader market, November is historically one of the strongest months for stocks, and there's plenty of optimism heading into the year's final stretch. According to Bank of America, since 1927, the S&P 500 has posted gains nearly 60% of the time in November, with an average return of 1%. But when October is already strong and it's a presidential election year, as is the case right now, history suggests November gets even better. The best performing sectors to watch? Consumer discretionary, tech, healthcare, and industrials. Notably, last month, the S&P 500 climbed more than 17% for the year, with the major indexes crossing new all-time highs. Bank of America also points out that AI enthusiasm is supercharging mega-cap tech, with recent records for both Nvidia and Apple. The message: seasonality and market momentum are working together to keep risk appetites high. Speaking of AI, Nvidia has just set a record, becoming the world's first $5 trillion company, outmuscling even the GDPs of nations like Germany. Its shares are up more than 44,000% over the past decade, driven by relentless AI demand and data center dominance. While the Federal Reserve's second rate cut this year helped fuel some of that optimism, Fed Chair Jerome Powell cautioned that more cuts in 2025 aren't a sure thing. That uncertainty led stocks to trim earlier gains, with traders once again watching every data release for cues on inflation and future policy moves. As a result, tech continues to outshine despite periodic jitters, with Nvidia, Microsoft, and Apple each pushing above $4 trillion in market cap. Let's drill down to individual stock action in the tech sector. Broadcom and Nvidia have both rallied hard in recent sessions, fueled by new AI partnerships and record demand for chips and data center hardware. Broadcom stock jumped 13% this week, powered by a major AI chip deal with OpenAI and its critical role supplying connectivity hardware to Nvidia's newest supercomputers. The stock now trades around $1,250 and sports a staggering 28% annual revenue growth. Even so, some analysts believe Nvidia may offer even greater long-term upside, with its last reported quarterly revenue surging over 55%, profit margins north of 58%, and all signs pointing to sustained leadership in the AI hardware race. If you're playing the semiconductor theme, expect high volatility, but also significant opportunities if earnings keep breaking records. Switching gears, not everything traveled up yesterday. Adobe's shares slid more than 6% in a single session, despite rolling out new AI-powered product features at its annual Max conference. Investors remain cautious about the competitive risks AI poses to Adobe's core business, especially with so many startups and even giants like Microsoft and Google moving quickly into creative software. Adobe's fundamentals are still strong, with over 10% revenue growth and solid cash positions, but recent history serves as a reminder: this stock can be volatile, underperforming the S&P 500 during major downturns and often taking time to recover to its highs. For swing traders, these are the setups to watch. Finally, let's put it all in perspective with the closing numbers. At the bell yesterday, the S&P 500 finished up just a fraction, holding near 5,200. The Dow Jones closed flat at about 37,900, while the Nasdaq posted a small gain to end just above 16,000. Once again, tech megacaps led market direction, while investor focus stayed tight on earnings beats and rate policy signals. Looking ahead, keep your eyes on next week's key economic reports, including jobs data and ISM numbers, as well as another round of earnings from heavyweights like Apple and major banks. Inflation and Fed messaging will remain front and center, especially with so much riding on potential rate moves into year-end. That wraps up today's Stock Market Daily News podcast. For more insights, be sure to subscribe, follow us for daily updates, and visit our website for deeper analysis on all things markets and investing. Thanks for joining us. Trade smart and see you tomorrow.